Jim Rogers predicted the start of the commodities rally back in 1999. Now he says we're already in a recession and predicts it might be the worst one we've seen in some time. The chairman of Rogers Holdings joining us now from the Frankfurt Stock Exchange. Jim, good morning.
I'm delighted to be here, Carol.
It's great to have you here. Francine, just talking about the OPEC meeting. You know, we talked with you about when oil shot above $100 a barrel. At that point, you said you like some other commodities. I think you said cotton, coffee, and sugar. Now that oil's below 100, I'm curious if you think it's an attractive buy.
Well, I'm not buying it right now, Carol, but the surprise is going to be how high the price of oil stays and how high it goes. Nobody's discovered any oil for over 40 years. The world is running out of its known reserves.
So you think the trend is certainly higher at this point, and I'm curious if you do, how much higher?
Oh, Carol, I wish I were that smart. I have no idea how much higher. It's certainly go over 150. Who knows how high it's going to go during the bull market. Bull market's got years to go.
All right. I'm almost afraid to ask this question, but I'm going to put it out there, Jim. You know, you and I have certainly talked about the Federal Reserve and what they've been doing over the last few months. What's your reaction to what the Fed's done over the last 2 weeks, being so aggressive with rate cuts?
Well, you know exactly what my reaction is, Carol. I mean, the guy doesn't know what he's doing. What he's doing is trying to save a few financial institutions. It's bad for 300 million Americans. No, not just 300 million Americans. It's bad for the whole world. He is sending a flag. I give up on the dollar. I'm going to drive the value of the dollar down. That's going to cause higher inflation, higher interest rates. It's already happening. Commodities are going through the roof. If you go back to August 17th, when he did this, when I told you he shouldn't,
right,
you see that the price of gold has skyrocketed. I mean, skyrocketed. I'm not the only world person who knows that he doesn't know what he's doing. The whole world knows he doesn't know what he's doing, and he is driving down the value of the money and driving up everything else.
All right, Jim, you say you're not so smart. If you're figuring that out, how come Ben Bernanke hasn't? Why do you think he's doing this? Where's the pressure coming from? Is he just watching the equity markets or what?
Well, to my astonishment, he seems to think that the purpose of the Federal Reserve is to bail out a few investment banks on Wall Street and the stock market. Mm-hmm. You go back over the law which set up the Federal Reserve. It's supposed to maintain a sound currency, which he doesn't care about at all, and sound employment. For some reason, he thinks his mandate is to take care of Bear Stearns and Wall Street and the financial markets. I mean, this is a very dangerous and serious situation.
Jim, you were, obviously very critical of the Fed. I mean, if they shouldn't be cutting rates, then what should they be doing?
Well, first, the Fed is what got us into this situation between Greenspan and Bernanke. It's been just chaos, really, bubble after bubble after bubble, debasing the currency, increasing the debt, and acting like they never saw what was going on. You know, the Federal Reserve is supposed to control and regulate the banking system. These guys say they didn't even know about subprime loans. They didn't know what the banks and the investment banks were doing. Who are these people? I told you they didn't know anything. I told you they're dangerous people. What more do you need to know? And now they're debasing the currency, driving up inflation, which will cause higher long-term interest rates eventually and a worse recession. What should they be doing? Well, they should resign. But failing that, and unfortunately in America they will not resign, and there's no way to get rid of Bernanke for 12 more years. So he will stay on. Since he won't resign, what he should be doing is maintaining interest rates back at the previous level. Mm-hmm. You know, Carol, this is what the Japanese did. After their bubble burst, they kept putting Band-Aid after Band-Aid after Band-Aid, trying to prop up everybody in sight, rather than letting some people fail, letting the system clean itself out and start over. Here it is, 18 years later, and Japan is still trying to recover from its bubble. They're doing exactly the same, making exactly the same mistakes in America. And it's going to go on a long time. It's frightening to me what's happening.
Hey, listen, I know your focal point is China. I'm curious if you think in terms of your economic outlook here for the U.S., you think it's going to be one of the worst recessions in some time, Jim. Is it going to carry over? Is there going to be a ripple effect?
Well, my focus is not just China. My focus is the whole world. Yes, when the largest economy in the world is in recession, it certainly affects a lot of people. If you sell to Walmart or Sears, you're gonna understand that America's in recession. Many parts of the world economy, though, will have no clue that America's in recession and won't care. If you're in water treatment anywhere in the world, you don't know America's in recession and you don't care. If you're in agriculture, you don't know that there's a recession, you don't care. Some people will be affected and some will do well, just as has always happened.
All right, so how are you playing that in the investment arena?
Well, I'm buying agricultural products. I continue to buy the renminbi, the Japanese yen, the Swiss franc. I'm short. I hope to short more investment banks on Wall Street. I hope I shorted more. Short Fannie Mae recently. I hope to short more of these things if they rally.
Jim, it's Erik Schatzker here. I want to ask you a quick question about some news we're seeing today. You've got the Chinese aluminum company teaming up with Alcoa to buy a big chunk of Rio Tinto, the target of BHP. What does this say about the Chinese and their efforts to try and control the commodity supply and, of course, more importantly, the prices that those commodities fetch?
Well, China knows what I think I know, that the world has got huge shortages of commodities developing. It's going to be much, much, much worse. China's doing what any rational country would do. They're trying to buy reserves and trying to buy assets. That's what everybody should be doing. I mean, Alcoa, BHP, Rio Tinto, they all know what's going on. And so they're trying to buy more reserves all over the world. By the way, this may be good for their shareholders, and I happen to own shares, but it's not good for the world because it doesn't bring more zinc to the market. It doesn't bring more iron ore to the market. It leverages up the balance sheets. It leverages the operating abilities of these companies. So in the end, we have fewer reserve commodities down the road, and just makes the bull market even better. In that sense, it's good for me anyway, and for anybody who owns commodities. It's going to make the commodity bull market last that much longer.
But this is a deal, as it were, that could upset another deal. Do you see the Chinese playing more of a spoiler role like this as they see other companies enter into transactions that could, let's say, pose problems for China's consumption, China's demand, China's economic growth, that they would use state funds, as it were, to come in and play the spoiler?
Why are these state funds? A company's making massive amounts of money. It's got huge amounts of cash on its balance sheet. And why you say it's a spoiler? That's what capitalism is all about. If you see an asset and you want to buy it and you outbid the other people, what do you mean a spoiler? That's been going on. You should study the history of world capitalism. Companies are constantly outbidding each other.
Hey, listen,
I find that very confusing.
Well, spoiler only in as much as we're talking about BHP trying to buy Rio Tinto. Chinalco and Alcoa are coming in and buying a stake that may block that transaction from happening. Do you think the Chinese are going to be involved in more deals like that, effectively coming in, buying big blocks and preventing large transactions from going forward that may pose problems, let's say, for commodity prices?
It's not going to cause problems for commodity prices. It's bullish for commodity prices, because if all these companies are using their money to buy each other and to leverage their balance sheets, they're not spending as much money as they should on exploration or mining development. That's bullish for commodity prices. That's great for commodity prices. But wheeling and dealing in the financial markets that people have been doing for centuries.
You know, Jim, I think I'd be remiss if I didn't bring up this one story for our viewers. You've got Microsoft this morning apparently making an unsolicited, almost $45 billion offer for Yahoo. You hear news like this, I mean, do you care about it, or what do you think about it?
Of course I care about it. I'm short Microsoft, so I care a great deal about it. Is the stock up or down today?
It was initially up, but I think it pulled back a little bit on the news. Again, it's not an official offer, but it looks like they're finally going public. Microsoft's down a little bit right now. So, Jim, I mean, should they be doing a deal like this in your view? They're down. Actually, they're down, Jim, almost $2 here at $30.70 a share.
Oh, hallelujah, hallelujah, Carol. Thank you. I'll buy your tea. I'll buy you coffee.
I hope more than that.
Microsoft. Well, I'll buy you a martini.
Okay.
Microsoft is one reason I'm short is because Microsoft demonstrably is now going out and trying to buy up other businesses, because they've not been terribly good at going into other businesses. And as far as I can see, Microsoft essentially is a mature company. It looks like they're confirming it every time you turn around. So have at it. Go to it. They're demonstrating to the world my thesis.
So we made your Friday. Okay. Hey, listen, you mentioned earlier about shorting investment banks, and you're hoping to do short more if they rally. I mean, who can we talk about who you've been, is it everybody, all the big names, the household names?
Well, I've been shorting the ETF, Carol, just because it's easier that way. I have too many friends in the investment community, so I wouldn't think of shorting any specific one. I'm short all of us. I mean, we're in the investment community, so I'm short all of us, but I just short the ETF.
Can I ask you what percentage of your portfolio is at risk in that wager? I mean, is it a big one you're making here?
I mean, I don't have any idea. I don't have a committee I have to answer to, Carol. You know, I'm not going to live or die on the investment bank position, though. I mean, I have a lot of investment positions all over the world in many different asset classes.
All right. Listen, we're going to have to wrap up soon, but before we let you go, I mean, if you had to pick one investment, let's say, Jim, for the next, I don't know, 3 months, 6 months, what would it be?
One, the renminbi. The renminbi is probably this, I don't like to use the word safe for talking about the investment community, but the renminbi is probably the safest for the next 3 years, 13 years. The renminbi has a terrific future going forward.
All right. We're going to have to leave it there. Jim, always a pleasure. You have a great weekend.